Hello, welcome to LoanSense. Today's video is how much home can I afford with XXXXX salary? The reason I put XXXXX is because different salary ranges will offer different affordabilities. And this guide is how much home can you afford with that amount of salary, whatever it is, everything ranging from $50,000 to $250,000 salary. What home can you afford? And this is especially an important segment for those with student loan debt, okay? Because we're the only estimator on the market that accounts for systematic reduction in your student loan payment in order to afford more home. I'm going to create a series of videos such as how much home can you afford with student debt in an FHA loan if you're being considered for FHA, or under Freddie or under Fannie, right? I'm going to create those series of videos. So if that is relevant and important to you, please follow, like, and subscribe, okay? So let's start right away. First and foremost, what I'm going to do is I'm going to pull up our calculator. So I'm going to minimize my face size here so that you could see. This is our lender product calculator. I will link below to links on it's actually on our website, but I will link below so you can get the consumer version. The reason I'm using the lender version is because it's a little more powerful with a few more field options, okay? So first and foremost, let's just start with $80,000, okay, of income. Let's say, and by the way, how you should think about your affordability based on income also is dependent on if you're married and have double income, right? That will impact what you end up putting here. But the point is, let's say for simplicity's sake, let's just say you're one single person with $80,000 of salary. I'm going to say you have $70,000 of student loan debt. I'm also going to take the student loan debt out of the equation so you can see how a normal mortgage calculator works. I'm going to assume outside of student debt that you have no other debt. And that may not be the case, but I'm just going to isolate student loans as the only debt so I can show you if I just take out all debt, what affordability would look like. Let's say the student loans is an average of 6.8% interest. And again, let's assume family size of 1, okay? And let's also assume the mortgage interest rate is 7% and you're putting a down payment of 3%. Whether that's true or not, we could deal with at a separate time. So how much home could you afford if you had $80,000 in income with $70,000 of student loan debt? What home you could afford is very different based on if you reduced this said $70,000 payment from $806 to $393, which is what the government says you can afford based on an $80,000 income. That gets you an affordability of around $282,000. Now let's eliminate the student loan debt by putting a way lower value and just say, let's assume if we put a super, super low value for your student loan, like $100, and it says your payment is $1, then if you're about $80,000 and have no other debt, okay, no other debt, your affordability is about $324,000. Actually, it's $325,000, okay? Let's say, and so I'm going to leave the student loan impact at just $1, which lowering the impact of the student loan to $1 makes it so your ultimate affordability is the same. It comes to about the same right here, $343, right? Let's do this so that I can answer the XXX across the video from 50,000 all the way to 200,000. So at 50,000 with minimal student debt, you could afford at 7% interest rates with 3% down payment, you could afford about a $203,000 house. Now let's make it $60,000. I'm going to go up in 10,000 increment. You can afford a almost $44,000 house, okay? At 70,000, it is about $284,000. We already did 80, so I'll skip that. Let's do 90. At 90,000, it's about $365,000. It jumped up a lot because we already did the $80,000 at $100,000 with minimal other debt impact. It's $406,000. Now I'm going to jump by 20,000 increments. At $120,000, you can afford about a $487,000 house. Of course, also the monthly payment is corresponded below, so you can see that. I'm going to now jump to $150,000 income. You can afford about a $609,000 house. Let's say you have $200,000 of income. You can afford about an $812,000 house. And let's say at about a $250,000 of income, how much house can you afford? That is a $1 million home, okay? Obviously, now let's talk about the impacts of student debt, because the point of this video isn't just to spiel off from a calculator, but let's say you are a high earning individual. This is a high amount of money, but to earn this amount of money, you went to school and accumulated $300,000 of student loan debt, okay? The impacts are pretty real in terms of what you could afford before and after. So before, with no student loans, the impact was over $1 million. Let's say you had $300,000 of student loans and the fully amortized payment of $3,452 would allow you to afford $641,000. If you now reduced your payment based on your income, your payment would be $1,800 for your student loan, and as a result would boost your home buying power by a whopping $177,900 plus to $819,000. The reason I'm using high numbers is to show high numbers, as in high income and high student loan balance, is to show the impact of how managing said student loans really does matter to your affordability and how it could really tank your affordability. Like we saw at $250,000, it was almost $1.1 million, and it tanked the affordability just by having a student loan of a high balance, tanked the affordability by literally almost half. And by getting into the right plan, you could see it's boosted affordability to much, much, much closer to the original amount than if, $1.1 million down to $600. That's literally cutting affordability in half. And then by reducing the student loan payment, right sizing it to the amount the government says you can afford, gets literally a whopping almost $200,000 of extra affordability. So again, I wanted to show you that. Our calculator, I will link below to the consumer version of this. But the idea very much is we're the only calculator that systematically accounts for student loans. The next segment that I'm going to link right after this is, now that you see this, how does Freddie, Fannie, FHA, if you are in deferment versus in repayment, or in forbearance versus repayment, even if you're going back to grad school, if you're in in school deferment, how does Freddie, Fannie, FHA, I'm going to create guides and videos for each one, treat and recognize that student loan differently based on, are you in repayment or are you in forbearance or deferment, whether it's in school, pandemic pause, whatever it may be. So I'm going to have a full guide on that so you can understand the impact on your affordability, okay? Another really great thing, and our lender calculator can demonstrate that impact across all the different mortgage guidelines. The calculator, obviously, you can input things like, let's assume $250,000, $300,000 in student loans. Let's say there's a minimum credit card payment of $400 and a car payment of $500, okay? Obviously, those additional debts impact the ultimate affordability. As you could see, it went from $610 to $544, and it went from $810 to $722. So the calculator can account for all other forms of debt. And again, it's the only calculator, it's the only available product and tool on the market that will account for the reduction in payment based on an income-driven repayment plan, okay? I hope this video has been helpful. If it has been helpful, especially if you're a student loan borrower, please like, please subscribe, and please share. We cannot wait to come to you again with more episodes that can help you conquer your student loan debt and achieve whatever it is your financial goals and dreams may be.